Good evening, everyone.
Good evening,
This is
sir.
this is our discussion on compliances changes from with effect from 1st of April 2025. And there were certain compliances which were to be covered in by 31st March 2025. So year-end compliances were there, which eventually, if you had missed also, then also you should do it from here. For example, the LUT filing date was, let's say, 31st of March. But even if you have missed it, then even today, or let's say if you come to know after 1 month also, then also you should try and file it. Because the law is very simple. It's an age-long wisdom that for procedural discrepancy or procedural deficiency, a substantial benefit to you cannot be disallowed. So non-filing of or late filing of LUT is a procedural deficiency. Vis-a-vis ITC refund, or let's say exporting it without paying of taxes, or this is substantial benefit. So if you file late, then you can try and litigate later on if they try to deny you refund. But there are certain things which cannot be taken care of. Let's say, what do we say? What do we think about it? See whether you were about to claim for transporter GTA, you were supposed to file a form and you have missed that. So that could be a problem. Now, let's understand what changes are coming forward from 1st of April. But again, for QRMP, the date is 30th of April. If you want to claim for QRMP, you want to move. But again, if you have missed your composition dealer, you wanted to come into composition dealer, so then the date was 31st March. Again, if someone files a composition dealer application, let's say on 2nd or 3rd of April, and department denies it, they try to deny it. So then it could be a matter of litigation. Again, the payment was for 128A benefit, GST amnesty was to be done by, the tax payment should have been done by 31st March. And form SPL 0102 should be filed on or before 30th of June. So if you had paid taxes or there was substantial ITC, and let's say you had missed filing DRC 03, then try today, file as soon as possible, and try to take benefits of amnesty scheme. You could always say that there was ITC lying with you, and later on, what you did was you took the liability side mm, rather than making payment through DRC 03. You tried to adjust your ITC through that. So there are multiple things. Now, what are the major changes coming from 1st of April? So first is multi-factor authentication. You will be getting a OTP every time. Now, I don't understand this. We all know the password system, and OTPs are going for the main person, usually the director or the proprietor. So every time this might disturb the business also. So it is better to keep or where there are so many entries, and so it's better to have a separate mobile number for accounts department where they can get an OTP. But this carries a risk also. Let's say there are important discussions, important notices, then there are chances that the staff might miss it. So, so compliance is not so simple. Sometimes we feel that GST is over regulated. And that is the reason why we are facing so many difficulties. But what has to be done that from 1st of April, multi-factor authentications. Now, we all know that e-way bill, oh, sorry, e-invoice, this, yes, e-invoice. Now, the limit for e-invoice is 5 crore and above. Now, there has been a cap for 10 crore and above. The duration to generate e-invoice would be 30 days. So if you know, in up to 31st March, for more than 100 crore, this was capped to 180 days. Now the problem is different. The problem is that if you had missed e-invoice for previous year, so this 30 days cap is from 1st of April. From in one of the FAQs, they have mentioned it for any invoice generated from 1st of April. Now, let's say we presume a situation, the turnover was of 20 crore. And let's say they had missed it. Let's say they have not generated the invoice for February and March. Now, this time limit for 30 days is applicable from the invoice which are to be generated from 1st of April 2025. So for these cases, system is not allowing. In few states, it is allowing. Let's say for Karnataka, it is allowing. For Maharashtra, it is not allowing. So this cannot vary state to state basis. So if you are in Maharashtra, you should raise a grievance. The state's name were, for example itself, ISG, a very complicated topic. This has become a very complicated one. Now, what has happened in ISG? Earlier, it was a simple thing. See, see, when ISD, there are concepts how ISD and this concept has come. So GST was based on, say, they took every good thing from excise, excise, VAT, service tax. So in excise or VAT, the concept was that taxes moves with the goods. So wherever goods are moved, tax are moved there itself. But in service, the goods could be consumed at one place and tax. And even when services are consumed somewhere else, the tax is not moved. So that's why they came with the concept of input service distributor, ISD. So this concept was prevalent in service 6 also, and it has been borrowed from service 6. So the idea behind this was that everyone knows the concept of ISD and the language through which it was drafted was very. See, you all know that the drafting is very poor of GST laws. That's why we got so many amendments. So it was loosely drafted definition, and it said that whosoever wants to move input from one place to another would use the concept of ISD. We don't know. Now they have formalized or legalized a definition that if there are distinct persons, so we all know the concept of distinct person. You are under the same PAN, and under the same PAN, you are registered as a different entity. Let's say there are different states. So you are supposed to be registered, and you have to follow all mechanism of, say, invoicing, credit note. You can do anything, whatever you can do, or you are supposed to do with the third party. Even for branch transfer, You have to issue an invoice. Though in trial balance, finalizing the balance sheets, you will remove those transactions between the branches. But for GST purposes, it would be a different distinct entities. Now, what has happened, or practically happens, that whenever there is a movement of goods, the taxes move. But what about when the movement is of services? Let's say an entity has registration in 10 different states. Now they receive or they implemented ERP softwares. The cost of ERP would be higher. Now the HO has made payment for ERP, which has been implemented in all 10 different states. But HO has not moved the service part, the GST, ITC of. So the law is finalized or more formalized or legalized with the clear-cut wordings. So they say if one distinct person receives invoice for supplies consumed at by another distinct person, so they need to get themselves registered under the provisions of ISD and they have to move ISD, the service credit, from that entity which has received the invoice to the unit where the services are actually consumed. What does this mean? And there are three legs of this also. Let's say there's an advertisement services. So advertisement bill has been issued to the HO. But services. So this advertisement has been done pan India. So goods could be sold from any of the branch. सेल तो पूरे एंटिटी की बढ़ रही है. So in those cases, the credit has to be moved. Now, what is the way how the credit has to be moved? So if it is exclusive service for a branch, or let's use a formal word, of the distinct party, then ITC has to be moved to that party. If it is a common service, it's a common service, then it has to be moved in the ratio of turnover of previous financial year. So in case there is an ERP software advertisement, the ISD will be moved or input would be moved as per turnover. Let's say there's a different service of a security guard. So security guard, is it a common service? No. It's a specific service. The billing would be on the basis of number of security guard deputed at each of the branch or the district person. So in this case, it is identifiable. So because it is identifiable, the ITC would be moved in this case, as per the number of person employed. So for common services, turnover would be the criteria. For individual services or specific services, it would be through that. So registration or non-registration. So this is mandatory now. There is always a dispute between ISD and cross charge. But one thing you have to understand, ISD is for input service. Vis-a-vis cross charge is for output services which you are providing. Let's say for the branch who is providing to another branch, for one distinct person is providing to another distinct person. In nutshell or in crux, for HO or let's say for HO, marketing, research offices or research wing, they would generally be required for taking ISG registration. Even if you have doubt, you can just message me. I will provide you a detailed note on this. After that, also, if there is a doubt, then please get back to me. I am there to solve your queries. But please do remember that we have to be very careful whether we are advising our clients to get themselves registered as ISD, or we are advising them not to get registered. So this registration or non-registration, this is not your choice. It should be backed by something in writing, something which should be discussed with the management. Now, they have introduced a new section 148A with this year budget, track and trace mechanism. So for this, they would come with the rules. So rules are not yet prescribed. So in these cases, there are two, three ways which they would come with this. First is they would come with the tracking and tracing those which are relevant for human life. Let's say if in Europe, track and trace mechanisms are used for tracking for drugs and medicines so that they can actually track whether these medicines are genuine or not. Another area of track and trace in Europe is for sectors where we feel or the government feels that they are tax evasion prone. So in our when we talk about our country, there are a few sectors which department feels that these are evasion prone, like tobacco or cigarette, or let's say steel sector. Many people get notices who deals in steel, especially in Loha Mandis, or cement, real estate sector. So these could be also brought. So in these cases, there would be a separate software. It would be a costlier one, and there would be separate registration provisions. There would be separate reports, and whenever a product is released, there would be a numbering which would be embossed on it, and you can after this you can trace and track who had originally produced or manufactured these, and from there who and the whole of the chain from where it has been originated and whose ends this has gone through. So we have to be very careful. They would come with separate procedures for this. So if you remember, um, registration for cigarette and tobaccos have come for their plant and machinery, and there's a separate uh, statement from their side. So in this case also they will come. Now, what I feel that this should come for the higher end. Let's say for e-invoice also, they had assured in starting that e-invoice would be on the bigger corporates. But when they came with the limit of 5 crore, I think most of the entities are covered. They should not come track and trace for everyone. This is my humble suggestion, humble view. Credit note. Now, there is an ongoing dispute since its beginning for credit notes. What has happened? The credit note side, some party has issued a credit. Now, what they do, once they issue a credit note, they reduce their output tax liability. The party who is the recipient of the credit note is supposed to reverse their ITC, or if there is no ITC, they are supposed to deposit ITC in cash. Now, what has happened? For the all practical purposes, the companies issue credit note and the party doesn't reverse. So they are having a problem. There is a mismatch. So somebody has reduced his output tax liability, vis-a-vis the other party has not reduced his ITC or not reversed his IT. There are so many cases in disputes. So the party says, sir, the company says, how are we responsible? We have issued a credit note, whether the other party has accepted this or not. So this was an ongoing issue. Later on, department came with a circular, but as you all know, circulars are not binding on the assessee. If it is beneficial, we will claim benefit of it. So they have come with amendment to the law. Now, now we also know that IMS is there. So ideally, what will happen once this is reflected in your IMS? You have to accept the credit. If you don't accept the credit note, the other party is not allowed to reverse its output tax liability. But you have to do now. What practical the problem is that, see, I have received the credit note for this one. Now I don't have credit to reverse, but I am sure that next month I would be buying something. I would be having purchases next month and I would be having ITC. Now I want a window that I don't want to accept credit note this month. I will accept credit note next month and I will be reversing. I would be adjusting. Now this window would be provided. So you will be having time. Now there will be one-to-one match of output tax reduction in output tax liability and reversal of ITC. So this will be one-to-one match. And now it has a legal backing also. GST 7 now they have come, no, this should be filed sequentially. Earlier, see, because it is a government departments, they run with their own ways and they were not following this procedure. And all the returns you all know that now it is sequential filing. Now, for GST registration, they are saying, okay, you go and get verified at GST Suvidha Kendra. Now, the problem in this case was that, let's say, you are registered in 10 different states and your Aadhaar authentication is already been done in your principal state. Now, when in another state you want to do this biometric verification, whether you are supposed to travel there, the answer is no. Now they have come with clarification. In your same state, you can get it done. But again, this is a sort of good method where they are trying to reduce frauds, but in a long term, whatever they are trying, they are not able to achieve these kind of things. Sector specific changes are there. First, GST and used car, it was 12%. Now they have increased to 18%. Hospitality sector, now there was a concept of specified premises. Now there was a concept of declared tariff. Now where there was a declared tariff, let's say 7,500 per day of hotel rooms. If the declared tariff was less than 7,500, it was at a lower rate. But if it is more than 7,500, they were charging 18%. Now what hotels were doing practically, they were keeping declared charges less than 7,500. Let's say they are saying 6,000. And when you try to book them, they will say, okay, declared tariff 6,000, they will charge you 9,000. They will say, okay, premium charges for Tatkal booking or something like that, where you already must have encountered this spike in charges through IRCTC booking. So rather than, so they were trying to reduce the output tax liability. by declaring tariff less than 7,500 but charging more than 7,500 in actual terms. So this has been plugged. Now they have said whatever is your actual rate, we will go with that. So from declared tariff to actual tariff, there is only this change. For construction sector, we all know ITC for mall was in dispute in Safari Retreat, where we got a landmark judgment from Odisha High Court in Safari Retreat. Later on, this went to Supreme Court. Supreme Court gave a judgment in Safari Retreat and referred the matter back to Odisha High Court for for defining whether the mall should be covered in the definition of plant or not. Now, from this budget, they came with the amendment and then reversed the judgment of Supreme Court and Odisha High Court, and they have said no. Rather than it being read as plant or machinery, it would be read as plant and machinery, and we are not going to give you credits. So all the discussion, everything has gone waste. All the litigation has all gone waste. And this is a retrospective amendment. Maybe we might have a one next round of litigation that why this why this retrospective amendment you should be having a prospective amendment. Depends if any party goes to Supreme Court again or not. But again, what is clear with the amendment and the mindset of the government that they don't want to give you credit for this ITC on immovable property. So better plan your cash flows accordingly. So this we have discussed SPL1, SPL02 forms. This we have already discussed. Vouchers, they came with which came with details on the transactions on the voucher. They have said that if vouchers, there would be no GST when vouchers are issued, but GST would be only on when they are redeemed and not on the voucher per se, but on the supplies which they are receiving from this vouchers. So these were the major amendment in GST per se. Yesterday we were having, I was the moderator of the program yesterday at NIRC, where we had discussion, whole day seminar on year-end compliances, which we covered income tax, corporate law, and GST. A very successful seminar. Even the day of Ashtami, we had a 200 plus participant. Very encouraging one. And NIRC did this seminar on year-end compliances for the first time. So I would be reading those slides, and if possible, we'll cover a small video on this things also for other matters also for income tax and ROC, what the year-end compliances are and how we can be okay. Maybe not webinar, maybe a video or something. Anyways, would like to start with, I have discussed with my team. We will take your feedback to increase the number of webinars for you guys, where only the people from text practice module will be having the links and we'll be having more discussions with them. Let's finalize whether Sundays are comfortable to you or not, and we'll go ahead. If you have any queries, you can connect with me. I'm part of the group. My number is 981063855. So video for this would be available. Thanks, Akshat. But let me get back from everyone, whether they are happy with Sundays or not. and whether they want more recorded one or whether they are happy with live meetings. So let's take a feedback. Mhm. Thank you. Thanks a lot for your time. Thank you.